Well, good evening, folks. Hey, this shooter, Scott Henderson. It is Friday, July 19th, and we are going to go over grandpa stocks for July to get a little bit of an update of what looks good. Maybe a few entries that we have. Of course, at the end of our presentation, please do review our disclosure. Okay, first, let me start off just with the trader narrative for the week. I'm going to start off with we're in our final run to the FOMC, the 30th. Now, my question that comes to mind here is this the perfect bear trap? Or is this going to be the FOMC that's going to see a correction? And that really is the question here. Everything is toppy. However, I'm seeing a lot of leading diagonals in how the counts are setting up, especially on the index. And we also have a number of names that are sort of toppy. So the dips are actually an advantage, I think, here because they give us something to trade. Like, for example, crowd. I think it's going to be a good play, 50% back. We added that the later part of the week. Now, we had a decent sell in semis, which was triggered by Biden and his comments about expanding the bands. I think the sell is a little overdone, but we also had some of the Mag 7 come off. So, we got a decent close, but not a horrendous close. It's sort of where the market is on edge. Either president makes a comment about a specific sector, trade restrictions or tariffs or whatever it might be. We want to be conscious that we want to listen to specifically Trump or Biden's news on stocks or sectors that they are going to support or make more different. For example, if Trump immediately repeals Biden's EV mandate, right? Ford and GM will do well. Same with Toyota. And yet EV stocks will do bad. So we don't really want to be holding Tesla going into that news as an example. Now, I suspect that the rhetoric into the election continues, and I think it gets more aggressive in policy from the Democrats that might be restrictive. Like, I would not be surprised if before the election, they maybe go after one or two of the Magnificent Seven for their monopolistic status, whereas I find the Republicans a little more liberal, a little more business and industry friendly. Now, that said, the RNC was really a nothing burger. I actually think Trump gave back what he gained from the attempted assassination, or some of it, whereas Biden totally blew the debate. So I'm looking at it as an even playing field here. I don't think either one really has the longer term advantage because the Democrats clearly have a better podium than the Republicans do at this point, just because they are more entrenched after being in office the last 4 years. However, if Biden steps down, I think that's a different format. I don't know that we have a huge sell-off from either president, be very candid with you, because we have overcome many obstacles in this market that I don't think change that much with either president. It's just we're going to have to get on board and chase what they're going to support. AKA Biden supports EVs, Trump doesn't, as an example. Now, we're also in this final run into the FOMC this month. And, again, I'm going to repeat, is this the bear trap or is this going to be the FOMC that gets the correction? I want that to resonate because I want you to know here, you need to know it's not marginal. It's not an option. You need to know what you own, and you want to think of that as, hey, what's going to happen if the Fed doesn't cut rates? How much is that going to affect a particular stock? Well, maybe even you go back to that stock and look at the date of a prior Fed rate cut and see what stock did. Actually look up the date and do the homework. That way you know how it reacted when the Fed cut rates versus when it didn't, and you have a good understanding. So let's jump into the grandpa stocks. First one's Autodesk. Now, we've been in this base for an extended period of time. Got a decent sell off of the weakness this week, but I don't think it's anything extraordinary. We could do 50% back of this leg. So maybe about 225 is probably where I think the low is if this count resets. It would actually be better if it does because it would be more of a launching pad for this breakout, for those that hold. If not, I would look at, basically selling some cash secured puts around 225 is just my thought. If they get put to you, whether you hold the shares or rinse and repeat is going to be up to you in your book. That's just my thought. Let's look at Caterpillar. Looks really good. Even though we came off with this little sell, I think this is just a retrace. You have to get the retraces. This happened to land in an uptrend. And I would suspect that we pretty much recover most of this push lower on the candle over the next few weeks. And we ultimately get a breakout and head towards this target wave 5 around 416. Now, if we do get a little deeper back test and this turns into an ABC, this would be an ABC, this would be an ABC, and then another ABC here. We do get back down to trend support. I would get much more excited about entering a trade, especially for calls. So, but at this point, I don't think we do that. It's been, earnings were good. I mean, just considering the market, it was good. So, all right, Costco, we've had this long, basically we've traded in this range from this January 2020 low, roughly $30 up to $60. We've had the $30 range. So we put in this primary wave 2. I think that's pretty good looking at the divergence down here. We have our confirmed low here and a divergent low right here on this low. And this didn't give us a divergent low. So this is more of a bottom than even this low, which is good, which would, indicate that this is low, higher low, and then we should keep going. So we should test the top of the range. That may take some 3 months. Now realize this leg here was nearly a year. So if we get that kind of leg and realize we have to change this trajectory, this basing pattern to the downside, just a slow bleed here, because they think the consumer is a little weaker, I think is why we've seen the pullback in grocery stock. But at this point, then I think we do break out, head towards about 76 at some point in the next 3, 4, 5 quarters. So, obviously we do want to try and maintain a position trade in Cisco. All right, looking at Lockheed Martin, I think we're going to get a breakout up here. Roughly this 524, I believe it is. I put it in my notes. I should have put it in my notes. Oh, excuse me, it's 50810 is the breakout number. So, any push down to 450, I would be selling 425 cash secured puts is what I would be looking. You could push to 460, 450 to 460 strikes if we have the momentum and the FOMO. Now, one thing I noticed about volume here is we're squeezing a little bit to the downside. So, but I think ultimately LMT is a stock that we want to hold a position. All right, Chevron, similar look, nice descending triangle that we're coming out of. So I think we do get a breakout here, and our primary wave 3 is up there around 196 from where we are. So we got some decent upside. So, in this scenario, selling some 140 to 150 range cash secured put makes a lot of sense. If we come back with a green candle again in volume, I wouldn't even hesitate to buy some at the money calls on CVX, or obviously if you want to build a common share position, if you don't have one, it's got some decent upside as far as I'm concerned. All right, now looking at ServiceNow, we tested the breakout, rejected price. We've now done the back test, so we should launch out of here. Whether this stays shallow or not, I can't tell you. Main reason is I couldn't get a read on this volume because it's sort of all over the map. But I think the fact that we closed at 50% of the candle from the high on the day during a sell, I think that's pretty positive. So I would think that we do something very much like this with this candle. This was our back test and we start our next leg higher. So, I am comfortable with now selling some 700 to 725 cash secured puts. Now at a breakout of this candle, I would not object to taking some calls right around that strike, but make sure you give yourself some time. However, I don't like the price of the calls on ServiceNow. They're expensive. I mean, it's like going out and really buying Microsoft times 3. So, it's up to you, the size of your book. But that's what we have for this week, folks. Great trading. Until next time.